Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 29th of August 2021. Today we will discuss the topic of gold-backed cryptocurrencies. This is quite an interesting topic that I think is associated with a few misconceptions. So what is the truth about gold-backed cryptocurrencies? The first question we must ask is why proxies for physical gold exist in the first place? Well, the answer is that owning physical gold can be inconvenient in a variety of ways. It's heavy and so it's not convenient to lug around day to day. A suitable storage space is required and that needs to be very secure. When buying and selling physical gold, then assaying is often requested to ensure its purity. It might not be stored in a particularly easy accessible location, and it can be tricky to transport around. Historically, these issues were overcome by using gold certificates. These were used back when the currency was on a gold standard, and each certificate represents ownership of a specified amount of gold stored by the bank. The bearer of the certificate could convert the certificate into physical gold whenever they desired. With the development of the internet came digital gold. This was basically the digital version of the gold certificates, but with the added bonus of allowing transactions to be performed online and globally. One such company was eGold, which was started in 1995 and was used by millions of people around the world. And within 10 years, they were actually processing over $2 billion worth of transactions annually. And they had a monetary base of around 3.5 tons of gold. In 2006, the feds came after them and they were charged with money laundering and conspiracy. The age of the blockchain has seen the development of gold-backed cryptocurrencies. So here, one token of any particular cryptocurrency represents ownership of a specified weight of physical gold. So that could be a gram, an ounce, etc. The gold itself is stored by a custodian and the tokens are traded with the blockchain keeping track of who owns what. But meanwhile, the gold stays exactly where it is. The price of the token will be the same as the gold price, but interestingly, if that cryptocurrency becomes particularly popular, then that token could potentially increase in value greater than the value of gold. Gold-backed cryptocurrencies can either be purchased directly from the creator or through a crypto exchange. In most cases, you need to first buy Ethereum or Bitcoin and then exchange that for the gold-backed cryptocurrency. Now, the list of available gold-backed cryptocurrencies is long. So how do you evaluate which one you want to go for? Well, firstly, you want to know, is it actually gold-backed and fully gold-backed? Now, that might seem like a strange thing to say, but for example, Bitcoin Gold has no connection whatsoever to physical gold, but the name may lead some to the misconception that it does. Other cryptos might only track the price of gold and not actually be backed by gold. And then there are others which may only be partially backed by gold. Who actually owns the gold? Is the gold truly redeemable? Is it only backed by leased gold? Are the gold holdings audited regularly? What are the storage arrangements? And when it comes to the cryptocurrency itself, how liquid are those tokens? Let's look at an example of a gold-backed cryptocurrency called Paxos Gold. So this is on the Ethereum blockchain. It uses Ethereum blockchain. Each token is backed by 1 ounce of a 400-ounce gold bar, and that gold bar is stored in a Brinks vault. The custodian of the gold is the Paxos Trust Company, and the website states that every month a nationally ranked auditor will attest that the supply of PaxG tokens matches the amount of gold held. Now, that might reassure some people, but I always think, if you remember back, those nationally ranked auditors for companies like Enron and Wirecard, they did a great job, didn't they? And the other thing is that this company is regulated by the New York State Department of Financial Services. Next, I wanted to know about the redeemability of these tokens. Of course, they can be redeemed for fiat, that's really easy. Alternatively, you can convert it to physical gold. Now, to do that, you do need to redeem at least 430 tokens and a fee per gold bar. That will give you allocated gold. And then, of course, further arrangements and expenses will be required for delivery. The contract also states that allocated redemption may be subject to additional due diligence, whatever that means. Institutions have the option of redeeming tokens for unallocated gold. The tokens themselves do attract fees. So in the case of PaxG, there are creation and redemption fees ranging from 0.03% to 1% depending on volume. And there are also Ethereum transaction fees of 0.02%, but there are no storage fees. And from what I can tell, there are no fees for holding it. So, once you've bought the tokens, the creation fee is charged, and then that's it. You could hold it for 2 years with no fees. Let me know if I've got that wrong, but that's what I can tell anyway. Some gold-backed cryptocurrencies come with the option of earning income, and this is achieved by depositing the tokens in an interest account. Now, at the moment, interest rates vary between 4 to 8% per annum, depending on where you hold that account. And the interest is paid weekly or monthly. So that's a pretty good yield there. Similar to a bank, your deposit would be loaned out to others. Earning income in this way, however, does come with risks. So the first thing to remember is that these companies are not banks. You're therefore not protected against failure compared to banks or brokerages, which are covered by the FDIC or SPIC insurance. It's therefore even more important to do your homework about the company that you're handing over your tokens to. Another risk is hacking, and this is a very real risk because we've already seen a few examples of cryptocurrency and DeFi platforms being hacked. When we're talking about physical gold, the costs include premiums, storage space, security, and insurance. Now, one thing that I've really struggled to work out with this is how these costs are accounted for on a long-term basis by these companies and tokens. The fees that I mentioned earlier, as I said, they don't seem sufficient to cover it. So does anyone know the answer? Overall, it does seem a bit complicated and it does have its risks. So why would anyone choose to purchase a gold-backed cryptocurrency instead of physical gold? Well, it can provide an income, which is an important investment requirement for some. It also overcomes a lot of the inconveniences associated with directly owning physical gold. And in some jurisdictions, there may actually be some tax advantages to owning a gold-backed cryptocurrency. compared to physical gold, but you would need to check on that wherever you're located. Overall, I think gold-backed cryptocurrencies are the modern day version of gold certificates. The blockchain confirms your ownership of the certificate and the transactions, but it doesn't necessarily confirm that the underlying gold actually exists. If you do decide to invest in this way, then it's really important to understand why you're doing so, as well as balancing this with the associated risks. In the end, it comes down to deciding whether complexity and convenience is important to you, in which case gold-backed digital cryptocurrencies would work for you, versus the simplicity but inconvenience associated with physical gold. Next up, the market update. Let's start with the US dollar. And so this is the DXY on the monthly scale. So we're having a big picture view here. And I joined the previous highs here to draw this line. And this line has been drawn by joining these previous lows. And you can see that we'd also drawn this channel here by joining the highs and lows here. And last week we'd moved up, hit this channel and then come back down again. So there was a rejection at this level. And I still think that this is in a downtrend. I'm doubtful this will go above here because you've got a confluence of resistance here. Okay, having said that, how are we going to go down and how far are we going to go down? What kind of trajectory are we going to have and where are the pauses going to be? So the way to look at this is keep this channel here because that could come in handy. We'll know as time goes by. And I've also added these horizontal channels. So this one here was kind of to account for this price action and this price action here. And so this gives us this kind of range here between 88 and 86. And then the other area is around here. Now, remember, there's nothing exact about this, although I've got some exact numbers here, you know, it could be a bit higher, a bit lower. The thing with these charts is that although it gives the illusion of precision and so on, you can't expect perfection here. So these are kind of just rough areas that I've drawn in here. So if we go back to this channel area then, I'm thinking that this is going to go back down and kind of reach this midline. So I think we're going to get a fair drop in the coming couple of months. And then we'll probably get a pause around this area here between 88 and 86. Now, again, it depends how fast this drop is. If it drops faster, then we could be on this side of this midline here. And then after this pause between 88 and 86, a further drop, potentially down to about 82, 83, that kind of level. And I'm expecting that to occur sometime in 2022 to hit that target. After that, you know, I'm actually starting to think that that dollar milkshake theory might start to play out at that point, because with this larger scale pattern, once you get a breakdown, it's quite common to go and retest this area. Although we've retested it in a small way over here, it's entirely possible to kind of come halfway down to the target area. The main target area is actually down here into about 70. But I don't really get to that level till much, much later. So I'm thinking once we hit around 82, 83 level and move up here. And so we're looking at about 96, 97, could even kind of poke through up here and even go up to about the 100 level before coming back down again to restart that downtrend. So yeah, I mean, that's an idea that I have. We'll just have to see how things play out. But that kind of would fit with that trajectory video that I did about the gold trajectory ideas. Let's move on to gold priced in US dollars on the weekly scale. And again, some nice price action this week. So remember that I was saying that I liked the look of this wick here, very long lower wick, small body, green body, and this has been followed by 2 green candles. So that's really nice to see. Of course, we're not completely out of the woods yet. What we don't want is to break this lower line. I think price could drop pretty substantially if we did that. But we also, to be, increase our confidence in bullishness, we would want to breach this upper trend line over here. So we're looking at about 1860 over here. How could this occur? Well, I mean, it's 1860 if we were to go straight up through there. But, that's not necessarily the case. We could actually do something like this and then go up, which would mean, even more frustration. But then, precious metals do that, don't they? They frustrate us. Now, I've been playing around with pitchforks. And so I thought, look, let's have a go at pitchforks for the gold price. So we're still on the weekly scale. And so what I've done is I put the first point on this low here, the second point on this peak here, and the third point on this low here. Now, the thing with pitchforks, you've got to be very careful, because if you put those points in too early, then the whole thing can be wrong. If this turns out not to be the low, then you'd have to redo it and redraw the pitchfork. So, no tool is perfect. But so far, look, let's work on that assumption that these are the correct points here. With pitchforks, it's that midline that can be quite important, but also these lines over here, the green and the blue lines. And isn't it quite interesting, because price kind of hovered around this midline over here, came down, hit the green line, and then came down again, or obviously because we've placed that's going to be there anyway. But on the way up as well, can you see we've bounced off of this green line here? So the lower ends of the wick seem to touch that. So the next point looks like it's over here in that midline. And interestingly, that coincides with that downsloping trend line that we'd drawn previously. So that is coming out as being in the first week of September. And the price, about 1860-ish. I haven't got it exactly on here. And so what we want to watch is what happens here. I mean, what would be great is if we went up through there and just hovered around this before making the next move up. But we've also got to be aware of that turning point that I spoke about. So if we do get a turn, then possible kind of support areas to look at would be this green line or this blue line. What we don't want is for it to go back down to here, though. Yeah, that would be not ideal, particularly if we broke through there. So the further away from this we can stay, the better. But yeah, those are a couple of potential points to look at. And I actually favour this green line area because, of course, we've got an area of support over here as well. So either we blast right through there or turn around here, hit that green line, and then break out upwards there. Of course, this is all working on the assumption of being bullish. There are bearish ways of drawing this pitchfork as well. But like I said, I'm still bullish on this, so I'm just going to stick with this for now. Let's move on to silver in US dollars on the daily scale. And yeah, this is pretty messy, isn't it? This is dating back to August, and we've just got this long, sideways, rectangular kind of movement, really, isn't it? And silver, look, yeah, it's come up a bit, yeah, and we're up at about 24 now. And so that last day of price action was actually pretty nice. But look, we've got all this price action here to work through at 24, and then we've got another area of resistance at 26. So it's not necessarily going to be easy to get up there. But look, do we have the momentum to push up through there, through those resistance zones? I mean, certainly over here, people seem quite fed up of silver. And, you know, I'm sure there are people who've just stopped looking at the charts at this point. In terms of if we drop below 22, then yeah, I think there's a fair chance of going down to about 1850-ish. But yeah, I don't know. I still think there's hope. Now you might think, oh, why does she think that? Is this just blind hope? There are always things that we can look at. So if you remember a few weeks ago, I was talking about this wedge here, this descending wedge. And so price had been moving up and down. And then when we came here, I thought, oh, maybe we'll move back up and break out. And of course, we had this false breakout over here. But that failed. And about 30% of these patterns do fail. So you do have to bear that in mind. None of these things are perfect. But then I thought, look, how can we combine this to try and help us? And so here at the bottom, what I've got is the 200-day moving average. So it's the distance from the 200-day moving average as a percentage. And what I've done here is drawn a trend line. So the touches are here, which kind of corresponds with the top of the wedge over here. And basically, I've just joined all the tops here. And what you'll see is that this never actually did break out from that downtrend there. Right now, we're right up against that line there. So, you know, perhaps if we move above, say, 24.30, I think, we may get some more momentum to move to the upside. But yeah, this will be interesting. If we get knocked back here and it keeps going further down, then yeah, I think we've got further downside in silver. So that could be something to watch. I'm still working with this and playing around with it. So we'll look at it prospectively. Next, we've got the GDX miners, gold miners on the daily scale. Lovely green candle over here. One of the things to note here is that there was a gap over here. It did try to fill it, but didn't quite make it. Whether it's going to have another go at it, I'm not sure. But as we've said before, there's lots and lots of gaps above. So if gold does go up a bit and then comes down, then what could happen with the gold miners potentially is that we get a closure of this gap over here before getting knocked back and then making its way upwards, perhaps. That's just conjecture, who knows. But yeah, it's a bit tricky, the GDX, to look at the moment. But I do like that green candle. And finally, we have the silver junior miners on the daily scale, SILJ. And again, last week I mentioned this wedge again. And we had actually looked at that distance from that 200-day SMA last time. And so this time what I've done is drawn that upper trend line, and you can see we actually broke out of it over here. So that was when price was over here. And so I think that's quite interesting. Here we've actually poked out above that as well. Now that doesn't mean that price is just going to steam straight up. It's going to be jagged, you know. I mean, we might go a little bit further up, and sometimes you can actually dip back down into it before moving onwards. And it may be that it tries to fill that gap again. So just watch out for that. But I think this is a potentially positive development here. But let's keep a watch. I'm interested to see how that indicator works out. Well, that's it from me this week. Over here, it's pretty dystopian kind of feel to things. Even takeaways are banned. Well, it's a good thing I can knock up a good meal. Anyway, hope you're all doing well. All the best and see you next week. Bye.